What are the origins of US financial consumer protection? Imagine trying to buy a house or open a bank account in a new country without knowing if the rules are fair. It would be confusing and risky, right? That's why the United States started creating laws and agencies to protect people like you and me when it comes to money. Over 100 years ago, the government realized that consumers needed help fighting unfair business practices. In 1914, they set up the Federal Trade Commission to stop companies from using tricks in advertising or selling financial services. This was a big step because many people didn't have much info about how banks or lenders worked back then. Then came the Great Depression in the 1930s. Thousands of Americans lost their savings when banks failed. To fix this, Congress passed the Banking Act of 1933. This law created the Federal Deposit Insurance Corporation, which guarantees that if a bank closes, your savings up to a certain amount are safe. This made people feel more confident about putting their money in banks. In 1968, Congress passed the Consumer Credit Protection Act. This law made lenders tell borrowers exactly how much they would pay in interest and fees. It also limited how much of your wages could be taken if you owed money and banned very high interest rates. This helped protect people from unfair lending practices. Later, laws like the Truth in Lending Act made sure credit card companies and banks had to be honest about interest rates and charges. This is especially helpful for immigrants trying to build credit because it shows the real cost of borrowing money. After the financial crisis in 2008, the government made even stronger rules. In 2010, they passed the Dodd-Frank Wall Street Reform and Consumer Protection Act. This law created the Consumer Financial Protection Bureau, a new agency focused only on protecting consumers. It makes sure banks and lenders follow fair rules and provides tools to help people make smart financial choices. For immigrants, these laws mean that financial companies must treat you fairly and give clear information. Whether you are opening a bank account, applying for a credit card, or sending money abroad, these protections help you avoid scams, hidden fees, and unfair treatment. So, the origins of US financial consumer protection come from early efforts to stop unfair practices, strengthened by major economic crises. Today, agencies like the Federal Trade Commission, Federal Deposit Insurance Corporation, and Consumer Financial Protection Bureau work to keep your money safe and your rights protected. Knowing these protections can help you feel more confident managing your finances in the United States.